Welcome to The Explainer. Today, we're taking a dense, data-heavy earnings report and, well, transforming it into a compelling story of strategic execution. If you've ever looked at a corporate financial release and thought it was just an endless wall of numbers, you're definitely not alone. But hidden inside all those numbers is the actual blueprint of a company's momentum. So today, we're deconstructing Trane Technologies' Q2 2026 report to see exactly how they engineered a truly historic quarter, and honestly, what it tells us about the booming green economy. Okay, let's dive right into this. We aren't just looking at a company that had a quote-unquote good quarter. We are analyzing a global climate innovator that delivered exceptional, expectation-shattering results. Trane Technologies is known for its commercial HVAC, residential, and transport refrigeration solutions, and they just posted numbers that absolutely demand a closer look to really grasp the sheer scale of their current market dominance.
I want to start by giving you the bottom line right up front. And it revolves around this staggering number, $12.1 billion. That is the size of Trane's record backlog at the end of the second quarter. To put that into perspective, that's roughly equivalent to the entire GDP of a small country. It's a massive war chest of future business, and it's up 70% year over year. So the central mystery we're going to solve today is simply, how exactly did they build such incredible future momentum in just a single quarter? Here is our roadmap for this explainer. We'll start with their record-breaking second quarter, see how the Americas lead the way, check out their global segment performance, look at building a massive backlog, and finally wrap up with them raising the full-year outlook. All right, part one, record-breaking second quarter, the headline numbers. The top-level metrics here are just phenomenal. Organic bookings, which, as a reminder, strips out the impact of currency and acquisitions to show pure demand, were up 37%. Adjusted continuing earnings per share rose 11% to $4.31. Now, what's really interesting here is that 123% book-to-bill ratio. For those who track this, you know a ratio over 100% means you're receiving more orders than you're currently fulfilling and billing. So at 123%, Trane's future pipeline is growing significantly faster than their current, already record-breaking sales. To humanize that data a bit, let's look at how their chair and CEO, Dave Regnery, framed it. He said, "We continue to see heightened demand for our sustainable, energy-efficient solutions, resulting in strong organic revenue growth, exceptional bookings strength, and a record backlog." So this isn't just some random spike in sales. Trane is riding massive secular trends toward decarbonization and energy efficiency. Global mandates to improve indoor air quality and reduce carbon footprints. These are the powerful underlying engines driving these massive numbers across their entire portfolio. Moving on to Section 2, the Americas Lead the Way, the MVP segment. Another truly jaw-dropping metric here is 130%. That represents the increase in America's commercial HVAC applied bookings. Think about that for a second. They more than doubled their orders from the exact same period last year. And this wasn't a one-off fluke either. This actually marks the fourth straight quarter of over 100% growth in this specific category, pushing the America's commercial HVAC backlog up roughly 90% year over year. Looking at the broader America segment, the success is totally comprehensive. Total bookings for the region hit an all-time high of $6.6 billion, which is up 44%. Net revenues were up 12% to $5.27 billion, and adjusted EBITDA climbed 10% to over $1.2 billion. And what makes this even more impressive is that their transport refrigeration revenues in the Americas actually saw expected low double-digit declines. Yet those exceptional commercial HVAC bookings completely overwhelmed those headwinds and carried the entire segment to new heights. All right, let's move to Section 3, Global Segment Performance, the Worldwide Context. Reviewing the organic year-over-year change gives us a clean, unified view of the entire business. You can see the total enterprise delivered a very strong 9% organic revenue growth. But look at how broad-based that performance actually was. It wasn't just the Americas driving the growth. The Asia-Pacific region was right there alongside them, showing tremendous strength across both bookings and revenue. When we impartially compare the regions, we see a really fascinating split in global demand. The Americas and Asia-Pacific are absolutely booming. APAC saw organic bookings soar by 31%, yielding a book-to-bill ratio of 131%. Meanwhile, the MEA region, Europe, Middle East, and Africa, was noticeably softer.
While EMEA did see a 4% organic bookings increase, they actually experienced a 4% decline in organic revenue, with adjusted EBITDA margins dropping 360 basis points. It really highlights how outsized the performance in the Americas and APAC had to be to drive those record enterprise numbers. Next up, Section 4, Building a Massive Backlog, Cash and Capital Deployment. So the crucial point is this: profitability on paper is great, but cash is reality. Through the first 6 months of 2026, this record performance generated approximately $1.6 billion in free cash flow, which was up substantially from the prior year. And honestly, this kind of liquidity provides a company with immense financial optionality in how they position themselves against their competitors. So how do you spend that kind of cash? Well, Trane lays out a very clear hierarchy of capital deployment. Step 1 is their top priority: reinvesting in the business. That means expanding capacity, driving innovation, and optimizing operational excellence to ensure they continue to outgrow the market. Step 2 is rewarding shareholders. Year to date, they've deployed $690 million in dividends and $840 million in share repurchases. And finally, Step 3 is strategic mergers and acquisitions, with $340 million committed. They explicitly state their goal is to deploy 100% of excess cash to shareholders over time, basically balancing future growth with immediate returns. Which brings us to Section 5, Raising the Full-Year Outlook, Carrying Momentum Forward. So, what does all of this mean for the rest of 2026? That is the ultimate question here. With an exceptional first half of the year in the books and with massive secular tailwinds filling their sails, how exactly does management view the remaining 6 months? Well, the answer is they raise the bar across the board. The mathematical reality of their Q2 success essentially elevates the entire year. This brilliantly illustrates their confidence. They raise their full year 2026 guidance, now expecting organic revenue growth of approximately 9% and reported revenue growth of 11.5%. Plus, they bumped their adjusted EPS guidance up significantly to a range of $15.20 to $15.30, up from their previous target of $14.75. That right there is the pure power of execution excellence, paired with a $12.1 billion backlog. Which leaves us with this final thought. Trane Technologies has absolutely proven they are capitalizing on the massive structural shift towards sustainable, energy-efficient infrastructure. But as global economic variables like inflation, changing interest rates, and geopolitical shifts continue to evolve, it's going to be fascinating to watch how these macroeconomic factors interact with this incredible decarbonization tailwind. With a staggering backlog and massive demand for sustainable innovation, can Trane Technologies maintain this record-breaking momentum? The data certainly points to a highly resilient pipeline, but in global business, the next quarter is always a new challenge. Thank you for joining me for this explainer, and keep questioning the numbers behind the headlines.